It was another wild day for the markets. Dow, S&P, NASDAQ with huge swings throughout the day. NASDAQ ended up about 1%. The Dow and S&P within 0.25% of flat at market close. But the volatility is all ahead of tomorrow's important report on inflation. The Labor Department set to release the Consumer Price Index for the month of April. That, of course, measures the average change in prices that people pay for goods and services, such as groceries and energy. CNBC's Andrew Ross Sorkin's with us now, Squawk Box co-anchor. Hey, the question, I suppose, is, will we see signs that inflation may have peaked? I mean, what are you seeing?
I think there's actually an expectation that we may see it has peaked. And if it has peaked, I think that that will be a very good sign for the markets. And in this environment, given the volatility, everybody's looking for anything that looks positive. Having said that, if in fact it doesn't look like it's peaked, and again, President Biden's right, it could still continue throughout the rest of the year, but the expectation is that it's going to come down throughout the rest of this calendar year. But if it's worse than people expect, that's going to create a view that the Federal Reserve is going to have to act even more harshly than they have thus far, which means more increases in interest rates. And that is the question. What does the Fed do as a result of this? But
isn't it possible that the Fed's already so far behind the curve that the Fed may not be able to contain this?
Oh, there's no question. The Fed has a great conundrum in front of it. The administration, President Biden, has a great conundrum in front of him because there are not very many tools that can solve this problem, because the problem at this moment is still about supply. There still is just not enough supply across the board, whether it's gas at the pump or labor or just about anything else, at a time when there is huge demand. And so what do you do about that? The only tool they have is a blunt instrument. It's to reduce demand.
Yet you can't get the supply out of China, and you can't stop the war in Ukraine. So we see all this volatility. If we see inflation start to slow in this report tomorrow, might the markets ease up?
I think they will. The question is whether it's going to be a head fake, whether this report really is going to be the one that portends what's about to happen more broadly for the rest of the year, or whether we might have had a moment where it starts to dip, but then, as we know, COVID has not gone away, sadly. The war has not gone away. And so whether those things ramp back up in other ways we haven't expected, that's still going to be on investors' minds going forward.
We've had head fakes before, and they've been disastrous. Andrew Ross Sorkin, I know because I watched you this morning. Thanks for your time. I'll see you tomorrow.